This discussion is for informational purposes only and is not an offer or solicitation of an offer to buy or sell securities. This is not a recommendation to trade, buy, or sell any companies discussed. We recommend you consult with a professional investment advisor before transacting in any securities mentioned in this discussion. By viewing or listening to this event, you agree to the terms and conditions which you can view in full at msmicrocaps.com.
Please also be aware of the company's safe harbor, which explains that this chat may include forward-looking statements that currently represent the company's views, opinions, and statements, which may or may not materially be representative of future conditions and events. Thank you.
We are here today for our second presentation of the day, Better Online Solutions, NASDAQ BOSC. We're here with the CEO, Eyal Cohen. Intelligent Robotics, RFID Technology, Supply Chain Solutions. We actually had a conversation with Eyal at GeoInvesting for a skull session, a fireside chat opportunity a few months ago. So it's good to have Eyal back to see what's been going on since then. And now we're really going to focus this conversation on the defense side of the business and just learning more about the company. So for a lot of you on the Substack here, probably did not catch that skull session.
Good morning, everyone, and thank you for making the time to meet me today. BOSS integrates cutting-edge technologies to streamline and enhance supply chain operation across three specialized divisions. So BOSS operates across three specialized divisions. The robotic division automates inventory process by replacing manual labor with robotic solutions. Our RFID division optimizes inventory management by tagging and tracking inventory throughout the supply chain. And the supply chain division integrates our franchise electromechanical components directly into our clients' products. Let's explore each division in more detail. The video is just 10 minutes. The supply chain division is dedicated to integrating franchise electromechanical components into the products of leading defense and high-tech companies. Our engineering team works hand in hand with our customers' R&D department to ensure seamless integration of our franchised components into their innovative design, generating for us long-term recurrent revenues as the client product with our embedded franchise component move into production. So the primary growth driver here is the number of components we embed, our engineers embed into our client's product. And that's why expanding our integration capabilities is central to our growth strategy. So over the last 2 years, we have doubled our engineering team and tripled the number of manufacturers we represent. And by strengthening our market position and the growth trajectory. We're proud to serve global defense leaders such as Israel Aerospace Industries, Elbit Systems, and Rafael, and there are hundreds of subcontractors around the world. Our network extends both directly to these three clients in Israel and indirectly via their subcontractor across the USA, India, and Europe. This network serves as our launchpad for global expansion without the need for costly overseas sales offices and sales staff. Our RFID division enhances inventory management in the production and logistic processes by integrating proprietary software with cutting-edge off-the-shelf equipment. We deploy ruggedized solutions for industrial and logistics operations such as handheld computer, forklift-mounted tablet, industrial scanner, thermal printers, RFID readers, and wireless systems from top brands like Zebra and Honeywell. Our proprietary interfaces ensure that every on-site inventory transaction is instantly reported to the client ERP, WMS, or MES management system. As a value-added service, our expert team establishes new logistics centers with wireless infrastructure that enable handheld equipment to communicate seamlessly with the client systems. We label their warehouse's shelf location and integrate this information into the warehouse management system while also conducting comprehensive inventory counts. We integrate and deploy essential software for logistic processes such as warehouse management software and field workforce management software. We provide and deploy off-the-shelf automation equipment, mainly for logistics centers, such as automatic sorters, as you see in the video, and automatic packing machines. Our business model is designed to generate recurrent revenues, including annual service contract from hardware and software, and ongoing demands for consumables like barcode label, RFID tags, and ribbons. We are proud to serve top-tip enterprises across Israel like Supersal in the food retail, IKEA in the non-food retail, and Teva in the industrial sector. Our robotic division streamlines industrial and logistics processes by automating labor-intensive tasks. We offer two main types of robotic solutions. The first one is our custom-built robotic cells. These are designed and built from the ground up to meet each client's unique needs. Second, we integrate off-the-shelf robotic arms using top-tier models from Fanuc or Yaskawa. We customize them with specialized gripper and peripheral system programming, adapting them perfectly to our clients' production or logistics processes. Our professional team includes mechanical and control engineers, programmers, and production crews specializing in mechanical assembly. Together, we deliver robotic cells that reduce dependency on labor, increase production capacity, and improve accuracy, and all within 3 years ROI. Today, 90% of our robotics projects serve the defense sector, where production is still heavily reliant on labor and facing increasing pressure for faster and higher quality output. This shift presents both a challenge to the industry and a major opportunity for us. Our flagship client, as a result, is Elbit Systems, with additional high-tech clients validating our capabilities in this space. Our team is led by a skilled executive team of 8 and 4 board members. Given the importance of technology, we employ 2 dedicated CTOs, one for the robotics and one for the RFID. Our total team includes 80 professionals, with 30% being engineers and technicians. Operational results and outlook. We delivered strong growth in the first half of this year. Revenue grew year over year by 35% to $26.6 million. And net income grew year over year by 75% to $2.1 million. Our backlog as of the end of June amounted to $24 million, 9% growth over March backlog, giving us clear visibility into the back half of the year. These results underscore the strength of our defense-focused strategy, reflecting years of deliberate investment in product diversification and operational excellence that position us to capitalize on the defense sector's robust growth trajectory. Based on what we are seeing in our business and our contracted activity for the second half, we raised our full-year guidance in the second time this year. We now expect revenue between $45 and $48 million. That's up from our previous guidance of $44 million. That is entirely organic growth from our business initiatives before any additional benefit of possible strategic initiatives. More importantly, we're raising our net income guidance to between $2.6 million and $3.1 million, up from $2.5 million. At the midpoint, it's about 24% year over year. This reflects not just stronger revenue expectation, but our confidence in our ability to convert that revenue into bottom-line results, plus profit leverage as we scale the operating base of our business. BOS presents a compelling investment opportunity. We have demonstrated consistent profitability with steady net income growth, achieving a compound annual growth rate of 49% from year 21 to year 25. Our financial foundation has never been stronger. Cash and equivalent grew to $5.2 million, up from $3.6 million at the year end. And combined with $24 million in total equity, we have the resources to execute our expansion plans. We have the flexibility to capitalize on opportunities as they arise, whether that's of supporting organic growth or pursuing strategic acquisition. Our valuations offer attractive upside compared to Russell 2000 index multiples. Price to earning PE ratio of Russell is 20 versus 9 for BOS. Price to book value 2.2 of Russell versus 1.2 for BOS. Thank you for your time and attention, and I'm willing to take your question.
Amazing. Thanks for the overview. That was great. I was just looking at the financials here, and on the revenue line, it looks like it dipped a bit in 2024 before doing a lot better this year. What was the cause of that?
Sorry, again, can you repeat, please?
The revenue in 2024, why did it decrease?
Yeah, compared to 23.
Yeah.
Yeah, in 23 it was the end of the year of the COVID, and there was a lot of companies urged to equip me with inventory, high level of inventory, and it reflects on the year after with a slow orders. But now in 25 we are in a relatively normal year. Put aside the effect of the defense effect.
Got it. Okay. And what level of growth is expected, going into 26 here? Is it kind of similar to 25?
We have not announced on the outlook for year 26 yet. We usually do it at the end of the year. But as a policy, we expect for a 10% growth year over year, unless we have a expectation for a higher level, as we did this year as well. We started in an initial outlook, then provided an outlook, upgrade, and then additional upgrade. And I hope that we'll have opportunity to provide additional upgrade upon the release of the third quarter results.
Got it. Okay. And on the margins, do you guys have a lot of operating leverage? I see the margins are increasing every year. So how high do you think those can go in the next couple of years?
I think as integrator, our gross profit margin should be in the range between 20 to 30%. Okay, we don't have any IP that we can sell it in 80% gross profit margin. On the other hand, we have a fixed level of expenses that as we increase our revenues and keep the operational platform on the existing operational platform, we can increase and reach closer to the 30%.
Got it. Okay. That's helpful. And on the defense exposure, so tell us a bit more about that. How much of revenue comes from defense, and what are the key trends within those markets?
We have three divisions: the supply chain division, robotic division, and the RFID division. The supply chain division, which is the biggest division with about $28 million annual revenues, it has exposure of more than 90% of its business related to the defense, directly and indirect. And the trend, and by the way, also the RFID division also serve defense client in the aspect of their warehouses. The robotic division, 90% of its business serve the production line of those clients. So we have a high exposure, and I'm glad that we have high exposure to the defense segment. The trend, we see the trend. We see the trend in Israel, and we see the trend in Europe and all over the world. The trend is increasing the defense budget all around the world. And I think the Israeli industry is a leading player. And we are focusing on those three major players, which are a world leader, Israeli aircraft industry, Elbit System, and Rafael. Stick to them, expand the offering to them year by year, adding more product, more solution, organically or through M&A, and grow with them together in Israel and overseas to selling to their subcontractors all around the world, in the US, mainly in India, and also in Europe.
Amazing. Okay. And then I guess the other trend that you guys are working on the robotic side is more on the automation. So tell us a bit more about that market.
Yeah. And this market, in this division, serve mainly, as I mentioned before, the defense industry, because it invests, the defense client invest a lot in expanding, increasing their production capacities, and they need more site because of shortage of labor and the increasing demand for quantities. They implement a robotic automation line, and we are in this field, and we are serving this mainly Elbit system, and we are building automation line for them, as we saw in the video, and not just for them, but once they are duplicating a facility to another location overseas, our automation lines included inside, and because of that, for example, there is a schedule to invest. We are scheduled to install our production line in Europe in the first quarter of 2026.
Okay. Awesome. Okay, last one for me, and then I'll pass it to Maj, is how are you guys thinking about allocating capital? You have a net cash position, you're generating cash. So what are you guys thinking about M&A, dividend, buying back stock, anything like that?
Yeah, we have like a $5 million, and the cash is growing. We
Yeah.
don't have loans. Actually, we have a small amount of loan that related to real estate that we acquired for our own use. And we will use this cash to finance the organic growth. And we hope that, now we are in a stage that the Israeli Defense Force need to replenishment their empty warehouses, and we are in a position that we can take big bids on that aspect and finance it. We have the capabilities, and also we will use portion of it for future M&A as well. We are looking for M&A opportunities. All the time I have one opportunity on the table, but we are checking it very carefully. And we are looking for a company that has a complementary product to our existing offering, selling to the same three major clients that we are selling, sitting in Israel, close to us in aspect of control, and has a history of solid profit and a growth trajectory. And the acquisition should move the needle on the top line and the bottom line as well.
Okay, awesome. Maj, I'll let you jump in with some now too. And sorry, actually, we do have a question in the question box here. On the M&A, what area and geography are you interested in acquiring companies?
Yeah, area should be in the defense. We believe that in the coming 5 years, there will be a lot of opportunities in the defense segment in Israel, in Europe, but mainly in Israel. As I mentioned, the Israeli defense need to replenish their warehouses, empty warehouses, fix the broken vehicles. So we have the right offering for this situation. So the acquisition will be in the defense, a company that's located in Israel because of a controls issue. And it should be integrator like we are. It could be a sale of component. It could be also involve assembly or some kind of work, additional value on the component. But it's very important that they are working with our major client. They are working with the R&D department with our clients, and I believe that the acquisition size will be also, I guess, not more than a third of our market cap, and it will be financed 50% by bank loans because it should be a profitable company with history of profits. And the rest will be a combination of the cash that we have in hand, and I believe some part, minor part, by fundraising.
Oh, I was muted. Awesome. Thank you. Yeah, Maj, feel free to jump in.
Thanks, Nicholas. Thanks for this question, Scott. That was Scott Weiss, Somnical Capital, who actually brought the idea to us some time ago. And also, I want to basically also make a quick mention. In your conference call, you did say you were evaluating 2 deals, right? So I guess you basically maybe narrowed it down to 1 deal now on the acquisition front. So is it still 2 deals? Or are you just looking at 1 right now, basically, of those 2?
Currently, we are working on 1 deal, but all the time there is a deal on the table.
Sure.
Okay, otherwise I had to announce on it. So we have deal all the time, but once it will be, ready for announcement, if we will reach to that point, so we'll do so.
Okay.
But we see it as important, it's very important for us to do an acquisition in order to grow our business and to capture the opportunities that are in the defense area this day.
I want to be clear, when you said your guidance was like 10% growth, well, it wasn't guidance, but your expectations maybe are 10% growth. That was the top line, right? Would you expect to grow bottom line faster than that 10% if you're growing 10%, or is that a 10% across the board?
Yeah, you're right. If we are keeping on the same, if we increase our revenues and keep the same operational platform, so the net income should increase in higher portion.
Okay, great.
But as a conservative approach, we give year by year 10% increase, and then after during the year we give an update.
Okay, and I want to make it clear too, so everyone understands, you are an integrator, so that means you're not really making many products. So you are basically finding technology component and then integrating that into a company's operations, where in each one of your segments, you're finding the best solutions for them, integrating it. But you do have a software. I don't think we talked about software too much today, and recurring revenue. I remember from our conversation on Geo, you should probably touch upon that, because I think that's an important part of your story. We got like 6 minutes left, and I have a couple more questions. So can you touch on those 2 things really quick? And maybe throw India in there too. So.
Yes, first we are integrators. By the way, in the past we were R&D company with the IP many years ago, and we decided to move to integration. And when you are integrator, your mission is to learn all the time, to find the best technology that other company invested billions of dollars to implement the best technology inside, and to implement it in our customer field, so it will provide them the best solution. So this is our task. So all the time we expose for great technology, and recently, let me give you an example, the AI in robots. So if in the past a simple task, it took us like 1.5 days to do an application in robot, today it can take us like 20 minutes. we didn't develop the AI. We use the AIs that others invested billions of dollars to implement in the robotic system.
Excellent.
We have a software unit here in BOSS that mainly does develop interfaces between the equipment on the field, on the production floor, on the logistics, and connect them to the ERP system. So this is interfaces. One of the most popular interfaces that we have is interfaces between RFID equipment and the client ERP system, which is our expertise. And our software team also does implementation of a warehouse management system and work field management system as well.
Excellent, excellent. Oh, all right, perfect. And I think we have a few seconds here. Let's talk about how important India is for you and where you are in that kind of inning of getting India as part of your growth story.
Yeah, I think India has a lot of potential to grow our business significantly in the defense segment. India is a major main platform for assembly for the aerospace and the defense globally. And most of the subcontractors of our 3 key clients here in Israel are in India. And we are doing a lot of business in India, and it will increase. And because of the big opportunities on the table in India, we are considering to have a physical presence in that area in order to capture those opportunities. By the way, it will require investment in working capital, but as I mentioned before, we are in a very good financial position to capture growth opportunities.
Okay, great. Now on your call also, I think you mentioned you have maybe some supply chain stuff going on. Is that right? Or did I hear that right? That there's is there anything going on in the supply chain we should be worried about? That's cautionary at all, or is everything there good in the supply chain?
Yeah, everything is good in the supply chain. Maybe you refers to we had in the RFID division exposed to the Israeli civil market, and
Okay.
it was during the war. It was a tough time for this segment, and but now after the ceasefire and the opportunities for peace with the Emirate and all those countries, I believe it will pay back.
Great, great. And I think you do have you do have some tax loss carry forwards here, right? And the NOLs from is that true?
Yeah, absolutely. From the
Significant
time that we were R&D company, so we got a present, and we have like $30 million tax carry forward that we can use, and we're absolutely using it every year. We are not paying taxes.
Excellent, excellent. Okay, well, I think you've really done a great job here, Eyal. I love helping us understand the story. Any more questions from the audience? I don't think we have any here. Or Nick?
I think there is one more.
We do, yeah.
Yeah, go ahead.
I'm sorry. So we have a question from Steve Waldman. 3 months ago, Romania was the first European country to produce Iron Dome technology. Has that deal closed? Follow up on other Eastern European countries have shown interest. Maybe India. So that's the question we have there.
So what's the question?
Yeah, should we say that? It says 3 months ago, Romania. Actually, Steve, are you there? You can maybe raise your hand, ask the question. Maybe better have a conversation if you're there, Stephen. Give him a second. There he is. Yep.
There he is.
Hi. Yeah. A few months ago, I read in a Israeli newspaper that Romania was the first European country to have interest in the Iron Dome, and I was wondering if you're aware if that deal has closed. Secondly, what other European countries have shown an interest to the best of your knowledge, and where do potential deals stand there? And lastly, just going back with India, I believe India has either shown an interest in Iron Dome technology or has already purchased defensive batteries. I know the United States did back in 2021. My question overall is Iron Dome technology worldwide. Can you address Romania, India, and any other countries worldwide? Thank you. I'll jump off.
Yeah, first, we have some significant portion of the supply chain revenues related to the component that combined embedded in the Iron Dome. And the client is, of course, Rafael. They are not sharing with me the prospect of sales over Europe, but I believe that following the ceasefire that we have here in Israel and potential for peace with the Emirate, I believe that now the closing of those kind of deals will urge. And they were before that, I believe that they were on some hold, kind of hold.
Thank you.
I think that's it. Cool.
Okay.
Thanks.
Yeah, that's all the time we have. Thanks, Eyal, for taking the time to chat with us and walk us through the story. It seems very exciting. And yeah, we'll continue following along.
Oh, thank you very much. It was great again to see you, to talk to you, and thank you for having me today.
Thanks, Al.
Thank you.
Bye-bye.
Take care.